What's up everyone, it's Kadi with MoneyVest. So in today's video, wanted to discuss one stock that I do believe is trading at very attractive valuations in the market. This is going to be somewhat of a similar stock pick as Super Microcomputer, SMCI, last year. And of course, since then, the stock has pretty much 10x'd. It's gone up a little bit over 1,000%. Now, although I don't expect this particular company, this particular stock to 10x in the next 1 year, I do believe that over the next 2 to 3 years, this company, this stock has a ton of potential, not only from a fundamental standpoint, but also from a technical analysis perspective. It's trading at a very attractive level. So in this video, I'm going to break down everything you need to know about this company. They reported their fourth quarter fiscal year 2024, I believe 2023, and the entire 2023 earnings on February 7th. And since then, the stock has been selling off a little bit. I believe it's down a little bit over 20 to 30% from its all-time highs. As always, if you enjoyed this video, find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, getting access to all the members-only private videos, access to all the trade alerts, trade ideas, options alerts, and of course, the MoneyVest.com platform that's going to be launching on March 31st. We're super excited to have you on board again. Link's going to be down below. There's a few more spots left with a 16% annual discount that expires in 3 more days. So we'd love to have you on board again. If you have any questions, feel free to ask me along the way. So this right here, again, is going to be that join Patreon thing, link in the description. And also do connect with me on Instagram. My handle is going to be CastWRP. There's going to be a link down below as well. So the company that we are talking about today is going to be Axcelis Technologies, ticker symbol ACLS. And they are in the semiconductor chips and manufacturing segment. They kind of belong to the chip sector and produces components of the semiconductor industries. The company designs, manufactures, and services ion implantations, dry strip, thermal processing, and curing equipment used in the fabrication of semiconductor chips as well. Super profitable, very strong cash flows, and as you guys know, on this channel, on MoneyVest channel here, I only bring you high quality companies, and this is one of those companies here. And they are a global leader in technology development and manufacturing of ion implant systems and services for the semiconductor industry for 45 years. And they are based out of Massachusetts with a headcount of over 1,700, growing installed base of greater than 3,000 tools and a strong portfolio. And this right here is going to be for the fourth quarter and for the entire fiscal year 2023. Record fourth quarter and full year 2023 financial performance with revenues coming in at $310 million and overall revenues for the entire year just crossing over $1 billion for the entire company here for the entire 2023. Strong EPS of $7.43. So if you take a look at where the company is trading right now at about $109, let's just call it 110. And if we divide 110 by $7.43, we're looking at a trailing 12-month price to earnings multiple of just under 15 for the company, which is exactly why I feel like it's a very attractive stock because the gross margins are 43%. Cash and cash equivalents sitting at $506 million, so a little bit over $500 million here. And year-end backlog going into the fourth Q 2024 here was sitting at $1.2 billion and solid Q4 bookings of $235 million for the company as well. Now, the reason why the stock's been selling off here, so this right here is the entire sell-off. It might actually be down a little bit more than 20%. It's actually down 45%. So definitely been almost cut in half here, trading down to about $109 from its all-time highs of well over $201 per share, is because of the guidance for the entire 2024. The earnings expectations are a little bit lower, and the expectations are that they are going to see a reasonable decline here on EPS on a year-over-year basis. But really, this stock here, I'm not suggesting, or I'm not really confident that, okay, 2024 could be the year for this stock to rip higher back to $200 per share. But it's really the story after 2024, once they kind of report the entire year in 2024. And then starting 2025 is when we start to see the comparables get a lot better and year-over-year growth to be much stronger for this company. So this is the guidance. They're expecting $242 million in revenue in the first quarter 24, 43.5% gross margins, 25% R&D and SG&A expenses. $45 million is going to be the operating profit, which of course you'll notice is significantly lower quarter over quarter from about 80 million down to 45 million. But of course they are generating about $70 million less in revenues here, and of course SG&A R&D expense is also lower by about 6 percentage points in fourth quarter 23 versus first quarter 24, and EPS as a result is also going to be lower, down from $2.15 to $1.22. So that is one of the reasons why we are seeing for this company selling off here, because earnings expectations are lower. Now this right here is the fundamentals that are supporting Exelis's growth, that of course, since it belongs to the semiconductor chip sector, we've got communications, 5G, and Internet of Things, so IoT here. We got electrification of automotive industry. We've got artificial intelligence, large language models like such as ChatGPT, data analytics and visualization, metaverse, and geographical fab expansion over the next several years, driven by deglobalization and government incentives as well. So these are all the TAMs that are really driving the entire semiconductor sector. But for some reason, Exelis here obviously not participating in this rally on the back of lower earnings expectations here. But overall, you'll notice that the growth has been fantastic. They've got a very strong record of consistently growing revenues. So this right here is the entire analysis. You can see $203 million, growing that to over $1 billion here. And of course, gross profit going from $70 million to almost $500 million. And operating income has gone from a loss to well over a profit of about $265 million for the company as well. When it comes to, again, the bottom line here, diluted earnings per share gone from negative 40 cents to well over $7.43. That's a very, very strong growth here for the company. And of course, shares outstanding has been relatively flat from 28 million shares to about 33 million. Especially if you take a look at the last 4 to 5 years, it's been somewhat flat to stable from 34 million down to 33 million. So it's been very solid here. This right here is going to be the margins. As mentioned earlier, they've got very good 43-44% margins on a gross basis, EBITDA margins of 24%, and we've got net income and levered free cash flow margins very strong at 21 to 7% respectively, and return on total capital here, total assets and common equity, very, very strong, well over 19 to 32%. And we've also got net income per employee. So if you take a look at profit per employee, which is a very, very important metric for efficiency, $177,000 in profit per employee versus $79,000, which was the average for 5 years for Exelis. So they've got more than doubled here in efficiency on a per employee basis when it comes to profit. This right here is the valuation. As discussed earlier, it is quite an attractive valuation. So we're looking at about 14, 15 times earnings. We've got enterprise value to EBITDA trading at about 12 to 11. Price to cash flow is a little bit higher here on a forward basis. I may have to take a look at this here in a little bit more detail, but trailing 12 months, we got about 22. And price to sales, we're looking at just a little bit over 3 for the company as well. And this is where the earnings expectations are. So they are expected to somewhat decline by about 9% in earnings in 2024, which is one of the reasons why we are seeing a decline here in the price, the stock price. But if you come over to TradingView, we've got earnings expectations to as much as $11.50 by the year 2026. And that again is going to be pretty solid growth here for the company, with of course revenue also expanding back up to over 300. This is on a quarterly basis. So if you come over to on a fundamental basis here, earnings and revenue on an annual basis, expected to go from about 1.1 billion, so almost identical revenue number, to as much as 1.5 billion dollars. That's going to be about a 30 to 40% growth here for the company, and this is going to be the annual expectations for EPS. Jumping to as much as $11.50. Finally, we're going to take a look at the balance sheet here. So balance sheet wise, they've got a negative net debt. That's exactly what we look for. So the company has more cash than debt on the balance sheet. That's exactly what we want. And finally, we're going to do some quick analysis on the price itself. So we're going to come over here. We're going to type in our valuation spreadsheet. We're going to plug those numbers in and really calculate what the intrinsic value looks like for Exelis based on the 5-year discounted earnings model. So we're going to type in ACLS. We're going to plug in the profit which the company generated. So if you come over to the income statement for the entire 2023, we're looking at a net income of about $246 million. So we're going to plug in about 246 over here. And then of course a growth rate that we have to plug in. So if you come over to this right here, we're going to basically forecast 2024 EPS, I believe, is around, let's just take a quick look here, 2024, about 682 to 1150. So 682, and then we're going to plug in 1150, and that's going to be by 2026, I believe. Just got to make sure, double check, 2026. We're looking at a growth rate of about 29, almost 30%, but that's on a 2-year basis. So I'm going to basically cut that down significantly to, let's say, 20%. And valuation wise, let's just go with about 20. Or maybe you can go a little bit lower. Let's just go with about 16 here. 12% discount rate, 10% margin of safety. We're going to go with about 0% share dilution. And even then, we're looking at an intrinsic value about $153 per share. And even these, I believe, are going to be a little bit more of an optimistic assumption. Even if we go with, let's say, 12% growth rate, 16 times P multiple, let's just go with 14 times because that's kind of in line with where the market is pricing Exelis at the moment. We're looking at about a $95, $94 estimated intrinsic value for the company, right? And that pretty much brings us to a overvalued by about 15%. This is going to be that sensitivity grid. And you can take a look at about $108. It's 16 times P multiple, 12% growth rate, which is a lot more reasonable for the company and in my opinion, a lot more achievable for the stock over the long term as well. That prices us at around the market price, about $108, $109 per share. So this is a stock that, in my opinion, is trading at a very, very good sort of valuation. Not to mention, on a weekly time frame, you'll notice it's just been selling off. It's very oversold here on the RSI and the MACD. And not only that, if you kind of break down the higher low here, this is the overall technical chart. You'll notice that this right here is a very strong higher low for XLS. And again, it's coming down to that support once again. Since 2020, every time it's kind of come down to that level, it's bounced right back up very nicely. So once over here, twice, 3-4 times here, and this is the 5th time that it's coming down to this higher low, and it's just been kind of validating this very nice higher high, higher low pattern. So this right here is the overall uptrend for XLS. So let me know your thoughts down in the comment section below. Balance sheet solid, consistent growth in revenue and profitability. Margins are good, efficiency is growing. We've got little to no share dilution. We've got a fair value of about $95 to about $107, $108 per share. Technically looks good, very, very oversold. The one thing I will mention though is that the momentum is very much to the downside. So there is no clear signs of a potential recovery just yet. But this is a stock, in my opinion, one can do more due diligence on. You can look into this in a little bit more detail and start to build out that position if you want to own this for the long term, where I do believe that 2025 onwards, this stock can and will indeed, in my opinion, perform a lot better than it has so far in 2024 and in the last year as well. So let me know your thoughts down in the comment section below. As always, make sure that you drop a like and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below. And as always, happy investing. I'll see you all in the next video.